Good morning, everyone. Welcome to Pre-Bell with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst, part of MarketSmith India Time. The disclaimer for this podcast is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Let's look into Nifty's daily chart to understand the market structure. If you look at in a slightly longer time frame, that is for the period of 3 to 4 months, Nifty has been in a very good uptrend. You can see the momentum was on the higher side. During this rally, Nifty found very good support at its 21 DMA on more than a couple of occasions. You can see here in May as well as in June, July period as well. It tested its 21 DMA and found very good support at this level. So going forward, this level is going to be a crucial level for the index. Still, Nifty is trading above this 21 DMA, which is a positive sign. And we are expecting this level to give support for the index. However, if this level is breached, then we might see further selling happening on the index front. So if you look at in a more near area, that is in the last 5 to 6 trading sessions, Nifty almost touched 20,000 level in the last week. However, since then, Nifty came under pressure. Some profit booking has been seen in the broader market spaces as well. During this, Nifty added 2 distribution days, one here and yesterday was also a distribution day. So overall, distribution day count is at 3. Distribution day is when Nifty declines 0.2% or more on volume higher than the previous session. When the market is in a confirmed uptrend or in uptrend under pressure, it's very important to identify weakness in the market because when the market is in a rally, there will be some time where the market will top out. So distribution days will help us to identify that top. We may not find the exact top, but we'll be able to find closer to the top so that our profits will be safeguarded by booking them. Currently, our distribution day is slightly elevated at 3, but Nifty is trading above its 21 DMA. So we are still in a confirmed uptrend, but the cautiousness in the market has increased. So additions will be very on the lower side. Only strong breakouts, stocks which have good ratings and which breaking out from the strong basis only will be added to model portfolio. And within the model portfolio, if we have any stocks which are not doing much or which are moving sideways, we'll try to exit them and make more concentration towards a few stocks which are doing good in the market. If the 21 DMA is breached and a couple of more distribution days are added, then we might change the market status to uptrend under pressure. Moving on to the key news items, stocks which are in the news during yesterday's market hours are some of the companies which came up with their numbers. Bharat Electronics has come up with their numbers for the June quarter. Revenue for the quarter increased at 12.8% year-on-year basis to 3,500 crores of rupees. Profit on the other side increased 23% year-on-year basis to 530 crores of rupees. EBITDA margin has also expanded similarly. For the quarter, it came at 18.9 from 16.5 in the similar quarter in the last financial year. So overall, the company has come up with their good results. Let's see how the stock reacts. Moving on to Railtel, the results for the June quarter, revenue increased 24% to 460 crores. Profit increased more than 48% to 38 crores. But on the EBITDA margin front, the margin has contracted to 15.9% from 17.8% year-on-year basis. India Hotels has also come up with their numbers. Revenue is increased at 15.8%, almost 16% to 1,400 crores of rupees. Profit increased more than 30% to 220 crores of rupees. But similar to Railtel, EBITDA margins took a hit. It contracted to 28% from nearly 30% in the Q1 of FY23. JK Lakshmi Cement has also come up with their numbers. Revenue increased 4.6% to 700 crores of rupees. Profit fell more than 29% to 78 crores of rupees. EBITDA margin also contracted sharply to 11.3% from 5.8% in the year ago period. So overall, JK Lakshmi has come up with not so good numbers. So we might see some pressure in the stocks. Moving on to other macroeconomic global news, US GDP for the June quarter grew 2.4% compared to a consensus estimate of 1.8%. So positive on the US GDP front. European Central Bank increased rate their repo rates by 25 BPS. This is the ninth consecutive rate hike by the ECB. So overall, just 2 days or 3 days back, we have seen US Federal Reserve also increasing repo rates. So this has been a global theme for the last 1 year. We have been seeing higher inflation rates, and to tackle these higher inflation, central banks across the globe are increasing interest rates. Coming to the companies which are which will be reporting their numbers today are IOCL, SBI Card, Marico, Bank of India, Exide Industries, APAR are some of the companies. Dawat is also there. LT Foods is also there. So please be watchful of these stocks which will be reporting their numbers during market hours or after market hours. If you have any of these stocks in your portfolio, please be watchful of your positions. We might see some volatile action in these stocks. Moving on to global cues, even though US GDP came in pretty positive trend, but US market closed in a negative trend. You can see all three major indices which we track: Dow Jones, S&P, and Nasdaq closed pretty much 0.6 to 0.7% lower in the yesterday market. Asian markets, if you see, Nikkei is trading fairly deep with cuts of nearly 1.3%. Kospi is trading 0.2% lower, whereas Shanghai is trading in the positive territory of gains around 0.8%. Yesterday, Nifty closing was around 19,660 levels. So GIFT Nifty is trading at 100 point above the yesterday's closing. So slightly positive opening can be expected on the Indian markets, but on the closing basis, we are not able to hold on to the gains. This has been happening for the last couple of sessions. So if the opening gains are not sustained, and if Nifty comes under pressure again, and if it falls more than 0.2% on higher volume, then we might change the market status to up and under pressure. For the chart today, we picked the Carborundum Universal. The stock is trading near its pivot for stage 2 flat base. It's just 4% to the pivot. Ratings wise, the stock is looking very good. You can see EPS is at 90, which is a positive, very strong, indicating a fairly strong fundamental character of the company. Technical ratings are also looking very good. You can see RS line has come down slightly because of stock moving sideways. But when the stock breaks out, this RS line will definitely move higher. A by D rating, accumulation distribution rating is very strong at A. That is majorly because if you see most of the blue bars are above average, and there are only few red bars which are above average. That is a very positive sign. On the number of funds front, you can see there was a slight dip from September 22, but from December and March, number of funds have picked up. So a positive sign. Sales front and EPS front, the stock has done very good. That is reflected in the EPS as well. So overall, relatives wise and the techno fundamental side, the stock is looking good. And if you are looking for fresh additions to model portfolio, you can consider this stock for addition when it comes to pivot on above average volume. Thanks for joining today's Probable. Have a good trading session.